Let's get out there. It's Tuesday, May 10th. And I'm Frank Curzio. It's the Wall Street Unplugged podcast where I break down the headlines and tell you what's really moving these markets. So I just spent the weekend in New York. Just typical. Whenever I go away, the market usually crashes. It crashes further. But my wife planned a quick trip for me for my 50th birthday, which is still about a week and a half away. But we had to do it this past weekend because every single weekend that I have is booked for the next 2 months with my daughters and playing sports and traveling, which I know a lot of you do as well. It's insane now. My oldest plays basketball, my youngest gymnastics, and she only has like another 2 tournaments left, but those are usually a little bit further. The rest are in Florida when it comes to basketball for my oldest. But I had no idea what my wife was planning. And, we just went away. We had a babysitter for the kids. She kept it a secret until Friday night, where she took me to the Nassau Coliseum to the WWF SmackDown, which was absolutely amazing. And, man, these guys put on a great show. It was incredible. It was sold out. The theatrics, the sound, the music, blasting. I mean, people had earbuds in because it was so loud that it's cannon that was blasting. Man, it is an amazing, amazing show. And yes, I know it's fake, but it's so cool. It was just amazing how packed it was, right? It's just, I couldn't believe how popular wrestling still is. I mean, people buying these expensive belts and wearing them and dressing up like the character. I'm talking about adults were doing this, and they were bringing their kids and stuff. But I guess it kind of makes sense when I think about it, because when I was a kid, I was a huge wrestling fan. So was my wife, and that's why, she took me. And I grew up in Ridgewood, Queens, and they had a place called the Ridgewood Grove back then, which few people I'm sure heard of. But we used to go there all the time in Ridgewood, and they had some of the best matches and wrestlers. They had Andre the Giant, George Animal Steel, the Wild Samoans. Jimmy Superfly Snooker was the most exciting, still to this day, man. I think he's just so exciting. Jumping off the top rope and just going crazy, and you can see me like do what he used to do on top ropes, which was cool. And I was just a diehard. And that's when the WrestleManias just started for WWF. And they used to have them every month at Madison Square Garden. And I used to attend a lot of them. So this was back in 1983. And I remember December 1983, Bob Backlund, he was a huge champ. He lost the belt to the Iron Sheik, who was the biggest enemy in wrestling. And it was a massive story because Bob Backlund didn't lose a bout in 6 years. So people like crying in the audience, I can't believe Bob Backlund. It's so dramatic. Then the next month, I think Bob Backlund was no longer WWF. I think that's probably why he lost the match. And they said in a surprise showing, who's going to fight the Iron Sheik? And this is WrestleMania 6. And Hulk Hogan came out and the place erupted. And he beat the Iron Sheik and, won the belt. And that was it. That changed the face of wrestling forever. And for me, Hulk Hogan is my man. That's the number one interview right there. That Michael Jordan, just a hero of mine when I was younger, and just watching him, but being there to see that, it just makes it so much more powerful, which is really cool. But he wasn't even on the card, and for him to come out and just really, really exciting. But it was awesome, entertainment as hell. And then on Saturday, which was the real surprise, she planned a surprise dinner with five of my closest friends, who I know basically all for 40 years. One of them I've been friends with since I'm 3. I'm mentioning on the podcast, I'm not kidding. And he was telling stories and stuff, saying that, even at 3 or 4, we weren't allowed to cross the street in New York. And he was like, hey, you want to play ball? We would throw the ball across the street all the time. That's how long it's been. But these are guys that I spent, most of my life with. And then we went to a local bar, and my friend owns it, and we went there, and that's when the major surprise came, because 25 of my friends I play basketball, guys I've known my whole life, were there, and man, we had a great time. We just drank, laughed, sang karaoke, talked about old basketball stories, because we won lots of championships and leagues when we were young. We just had a really, really good team, and it was just amazing. It was amazing, and I always say life's about moments. I tell my kids that as well. Don't worry about the test that you didn't do good on and whatever. If you have that opportunity, it is. When you remember, like today, your 40s, your 50s, you remember the time. There's moments that you remember that are great. And a lot of them are irresponsible times where you had fun and it's just exciting. I mean, this is one of the moments I'll never forget for the rest of my life. That was amazing to see all of my friends from New York hanging out. Just having fun. We used to go to that bar a lot when we used to, after the games, all sweaty and just hang out, maybe play Texas Hold'em and just drink and have fun, and then go home late and get yelled at by our wives and stuff like that. But, it was really touching. It was really cool. I remember that. So my wife earned some massive points. I told her that, she bought a month of me kissing her ass. I said that as a joke, but, she actually did this on Mother's Day weekend, right? So the most unselfishness of unselfishness. And yeah, it was just really incredible, that moment she created. So yeah, love her. Thank you so much. It was unbelievable. That was something I'll never forget. Yeah, one of the best moments, man. So it was really, really cool. Now, there's several reasons why I'm telling you a story, because the markets are in free fall, and this is a market podcast. There's a reason why I bring up the story. Several. So first, talking to my friends, every single one of them. I'm not saying even so, every single one of them. They were like, you're so lucky to be in Florida. You're so lucky to be in Florida. They didn't say that. Now they say it past, after COVID and after everything that's happened. But they used to make fun of me. But every single one of them told me that they're moving out of New York. It's either once they retire or the kids are out of high school and going to college. They're gone. They're out of it. And they also said New York is a disaster now. And I wanted more details on it. And it was interesting because I had Al Teacher on this podcast. He's a close friend. Al Teacher, really cool. And he wrote an article that New York is dead. And then Seinfeld came out and said, you know what you're talking about, and whatever, and tried to destroy him. New York's dead. New York is dead. It is dead. You go to New York City, you're going to see in a heartbeat. It's more dangerous now than ever. It's not going to change, right? It's just, cops can't police criminals, and criminals that get caught for felonies are out the next day doing it again. So my wife actually went to a Walgreens, and it was a local Walgreens in Queens. We were staying at one of the hotel that we're at to get hand cream for her hands. It was actually cold in New York. Wasn't for me, even though it was my birthday, right? But it was, I could picture the jokes coming in, but it was locked up, and it was like just regular hand cream. It was locked up in a big case along with tons of items. And it took them like 10 minutes to come with the key and open it. And I was like, what's going on? Why is it locked up? We don't know, right? We don't know. We live in Florida. I'm like, why is it locked up? And she said, well, people just come in and steal it and walk out. Come in, Max, steal it, they're gone. That's it. Which is crazy. I mean, growing up in New York, one of the most important things, even in New York or everything, is safety, right? It's the safety of your family. It's more important than money. It's more important than power. All of us, it's the safety of your families. And if you can't be someplace where you're not safe, you're going to be forced to leave. And I know a lot of my friends, especially hedge fund buddies that live in New York City, they're gone. They're out of there. They don't go to New York City. And everyone, even my wife, when she's telling me planning something in New York, I said, look, it can't be in New York City. It could be in Queens. It could be in Long Island, wherever. I just don't want to go to New York City because you don't know. I don't want to go there and you don't know what's going to happen. It's that crazy. So, when I was asking them, what do you want to do? Where you want to go? They all want to move to where the weather is nicer, right? Which is normal when you retire, right? So you want to move to an area that's nicer. That's Florida, that's Texas, Arizona. Florida's a hot spot, obviously, because, it's East Coast is closer and, they still feel like they could get, they're close to family and everything, but that's the spot, right? And especially with taxes. And if you look at Florida, home prices, I know mortgage rates are surging. I'll cover that in a minute, but they're not just going up. They're going up like gangbuster. There's no inventory. Everyone wants to move here. And that's the option, again, for the people on Northeast Coast. Now, why are they moving here? So not just the weather, it's protecting their families. And they say, well, I can protect myself and I can own a gun. That was surprising. Like in New York, you can't have guns ever, right? It's like California. That's why those areas are the worst, right? Because you can't protect yourself and they're limited police. The police can't really get involved. They don't want to get involved. And if they do get involved, they arrest the guy gets out even on a felony. Even the guy who attacked Chappelle is out, right? With a weapon, attacked him. He's out, right? So that's the new system in these areas. Whether, I don't give a shit if you're Democrat, Republican, what. That's the new system in these areas. That's the new world we live in. So people are leaving in droves. And when you're looking at Florida and the prices, properties are here up 30% in the past few months. That's on top of another 30% increase over the previous 12 months. Think about that. I said 30% over the past few months. So in my neighborhood, people are listing their home price at 20% premiums to where they should be selling. If you see it on Zillow, whatever you look at, right? All the websites. 20% premium. And this is 2 houses in a row. And I was like, no freaking way. Less than 24 hours, both of them gone in contract. Pretty close to those prices, I imagine. Otherwise, you wouldn't be in contract 24 hours. So if you're looking at the market, you're looking at regardless of how you feel about things, this is what's happening. People are leaving New York in droves. They're going to places like Florida. They're going to places like Texas or whatever. But you're seeing home prices in those areas, even though rates are going higher, surge, even though interest rates are going higher. But there are REITs. You recently recommended that have huge exposure to residential real estate in Florida, Texas, Arizona, right? Those are areas that have seen huge population growth, and that will continue. that may be a safe haven in this market, right? The residential real estate. Yes, rates are going up, but when it comes to these homes and you're saying, well, what about the appraisal values? Because a lot of real estate agents I know say the appraisal values are coming in, a lot less than what they're paying. It doesn't matter. They're paying cash. These people are coming with cash. They have cash. And you might say, well, $1 million is a lot of money to them. It's not $1 million because that's a shack in New York. So they're like, okay, I can sell my house for $1.5 million, pay no taxes on it because I'm going to roll it over to a new house, and now I live in a great area that I love, that's safer for my family, that I can own a gun, where the cops actually encourage you, the sheriffs and police encourage you and say, if anyone comes in your home, you shoot them in the head. They actually say that here. That's why no one's going into stores and stealing shit, right? Because you have to be able to protect yourself. The police aren't allowed to do it. The police can't do it, right? And I don't even know if it's worth it for them, right? Because if someone pulls out a knife and they punch the guy in the face and he hits his head, they're going to jail for life, right? For murder or whatever. That's the new system, right? Black Lives Matter is going to be all over them. Everyone's going to be all over them. That's the new system. And I had two friends that are cops there that are actually going to retire pretty soon. They just can't take it. It's crazy. I mean, you're risking your life, and then when you do the right thing, you can still get in trouble. So when you're looking at REITs, that's an area, and you're looking at New York and where people are moving. I mean, that's an area where people are going to Florida. Listen, that's the way it is. But that's one way to protect yourself. When we look at the market as a whole, we can tell you, the market sell-off is unbelievable. I don't want to put this in perspective here. So now down 25% on the NASDAQ, more than that. On Friday, one of the most ugly days that you'll see, another massive sell-off where 90% of the stocks finish the day lower. Okay, that's called a down day of 9-1. Whenever you have that, it's usually capitulation, along with the VIX, which is the fear index. So that pushes higher as things get more crazier. It only pushes above 30 when it's craziness, right? Sometimes it'll go past 40. But over 30 is a signal that we're close. It's over 30. So you would think today you walk in and we'll see a little bit of a rebound. That didn't happen. We're seeing another sell-off on Monday, right? So a Monday sell-off, and this is following a big sell-off on Friday, and you're saying, okay, what am I going to do? This market is becoming uninvestable. Even the good names I'm buying are starting to get nailed. You're looking at companies like agriculture, energy are getting nailed. Uranium looks great. That got nailed by 25% after going up a lot. I covered it last week. The reason why things continue to sell off is because of uncertainty. That uncertainty is coming from the Fed. And the Fed came out, and we covered this last week, but last week they came out and said, look, 75 basis point hike is off the table. And for some reason, the market went up 1,000 points and saw that as a positive. I thought it was a negative. Okay, the Fed again, you think they will learn, painted itself in a corner. And I think they made a huge mistake. And you're seeing that. So a 1,000-point rally lasted for what, a day? And every day since then, we've been getting crushed. Just about almost every single day. Now, when it comes to marketing, when it comes to, you never want to limit yourself in anything, right? If the data changes, you're going to get aggressive and change, right? So everything should be on the table. Everything in this type of market, the market's crushed, everything should be on the table. You see inflation running wild, because if we still see inflation rising over the next few months, which is likely, and I cover that, especially with energy and agriculture, the Fed may have to raise by 75 basis points or higher. And my take was last quarter, raised by 1%. Cover that even into the meeting. Raised by 1% now. Why? We all know where you need to be. It's at least at 2.75%. It's over 3% really. But where are you now? We're at 1%. So I guess the Fed's like, hey, you know what? Let's take our time getting there, which is another 12 months. You want to endure 12 months of this shit? Of what we're going through right now? The uncertainty? Praying and hoping that inflation moderates? I'd rather we get there sooner to those rates, and inflation does moderate. The Fed now has more ammo to lower rates, right? Now they're in control of the market again instead of the market controlling them, because the market is controlling their every move, and they're at the mercy of the market, which is extremely dangerous, and that creates uncertainty because no one knows what anyone's going to do, because the market's based on sentiment and feelings, and where are people going to stop selling? We don't know. But if we have some certainty, like we did even in COVID, hey, we're locking down everything, but we're spending trillions, and we're going to give you loans, and we're going to help you guys out. And then when did the certainty come during the credit crisis? All right, which is a great move by Bernanke. And I know people hate the Fed and everything, but I thought it was brilliant. Hey, listen, we need stability. Let's capitalize the banks and make sure everyone's money is safe and you have nothing to worry about. And that's when sentiment changed. And that's when the market took off. You need that. We don't have that right now. We don't have any certainty. We're still seeing all the same problems that exist, and the Fed has no fucking clue what it's doing. And it's frustrating as hell to see what's going on. Because even the nice name, the safe names are getting wrecked. And it makes sense because even during the credit crisis, what do we see? So subprime, then, the next level, and then the prime level started getting hit as well, right? Because then you start selling off because it's forced selling. There's leverage in the market. It's coming out. You're selling everything, going to cash. You don't even care what you own because now even your good names are down 10, 15% all of a sudden. You're like, I'm out of here. Because people are just selling and going to cash. They don't care. But we still have tons of uncertainty as the Fed, remains behind the curve. So we have inflation continue to rise, the dollar continue to move high, 10-year continues to surge. And the Fed said they're going to continue to raise rates through this firestorm, which is insane. It's something that's never happened in the history of this market. We are raising when the market's getting absolutely destroyed. Now, let's take a step back here and look what happened after the last Fed meeting. Let's look back after the last two Fed meetings. Because when we look back, the Fed decided to raise by 25 basis points, and this is in March, and then 50 basis points last week. So since March 22nd, since that 25 basis point hike, the NASDAQ is down 22%. 22% we're down, 22%. It's a lot. This is March. I'm not talking about January. I'm not talking about November. I'm talking January. Now, I know hindsight is 20/20, but hear me out, because this is some of the things I was suggesting. And again, I could be wrong on this. I have no idea. But I know what's going on is definitely wrong, and it's not going to work. But what if the Fed raised by 50 basis points last time? Because they tried to say 25 basis points, and market did the same thing. Went up a little bit, then came down, and then, he did about face because all the governors came out, and this was in March, a couple days later, after the weekend, and said, look, the Fed's losing credibility. We got to raise a lot faster. Right? He tried to sugarcoat it, hoping that inflation came down, and it's not coming down. Right? So you should have 50 basis points. You didn't. And then this time around, I was like, raised by 1%. Now, if you did that, 50 and 100 basis point hike, you'd be sitting at 1.75%, which is close to 2%. Again, still a little bit far, a point away from the 2.75, which you really need to be at, but not that far. Because now you're only at 1%. Now, if the Fed did that and raised by those amounts, again, what I was suggesting and pounding the table for, not saying I'm right or wrong, but do you think the NASDAQ would be down more than 22%? I don't think so. I mean, 22% is massive. We probably would have been down a little bit quicker, but I think we'd probably be maybe around the same levels. And we would have got wrecked. 22% is a massive, massive pullback in any major, anything. Is the Dow, the S&P, even a regular stock at 22%. I mean, holy cow. Do you think it would be? I don't know. But I know that we'd be closer to the 2% level at least instead of being at 1%. And now you're saying, well, we're not going to raise that aggressively. It's going to be 50. That's what we see, 50 basis point cut. So you're limiting yourself, right? Because the Fed would be closer. And the closer they are to 2.75 or whatever, now as inflation moderates, now you have the power where you're controlling the market. You could ease, hold up on selling bonds, on lowering your balance sheet, limiting your balance sheet right now. And in a couple months from now when inflation eases, and then, you could gradually start lowering rates, which is going to be a positive. That creates certainty. And you say, well, what about inflation? Inflation is definitely going to ease, guys. It's not going to keep going up. I mean, people are cutting back right now. Their 401ks are down 30%. They're cutting back. They got to stop paying for discretionary stuff. You're seeing that. Because the cure for higher prices is what? Higher prices. As demand's going to start to wane, because if you want to buy a car, Mercedes, whatever, at $75,000 and or whatever the price is, right? $75,000, and they're like, well, it's $85,000, $95,000, it's $130,000. Eventually, you're going to say, F that, I'm not buying this thing, right? So that's the cure. As the prices go higher, you're going to be like, it's enough, and you're seeing that across several sectors. You really are. You're seeing that in housing, some areas in housing, which makes sense. Not in Florida, not in the areas that people want to move in Texas and stuff like that, but you are starting to see it. Even the home builders talked about it because monthly payments. This is insane. This stat's insane. Monthly payments, just from the rise in interest rates at 5.5% now, from where they were at like 3%. And this is like 6 months ago. Monthly payments are close to $2,000 higher. Monthly payments of $2,000 higher. That's money that comes directly out of your savings, paying the bills. That's not going to go. Where else do you think that $2,000 is going to fund? It's going to go to a whole bunch of discretionary. So many companies benefit. It's filtered through the economy. No. It's just a payment I got to make. I got to take out of my savings. So obviously they're going to cut back $2,000 someplace, and that's just on a monthly basis. $2,000. I mean, you got to make what, $50,000 just to cover those payments with taxes in most states? I mean, think about that. Just to cover the extra payment. Things are going to start slowing. They are. They're seeing it in cars. You're not seeing it in streaming services, electronics. When a company like Best Buy says, hey, you know what, we're going to start selling patio furniture and beauty products, you know that the electronic sales are starting to come down. It's there. The writing's on the wall. But for me, when I look at that and say, okay, inflation is going to moderate over the next 6 months, I'd rather the Fed be at 2.5% or close to that than 1.25% or 1.5% with one more rate hike. It's just, why slow down the pace when the market's getting crushed anyway? Just throw it out there. Will it disrupt markets? Yes, but aren't the markets getting disrupted already? Again, hindsight is 2020. If you knew the market was going to crash the way it is, I'm sure the Fed might have thought about it. But for you to say that's not on the table, now you can't do that because the Fed has a credibility problem and the stubbornness of people, especially in power. I mean, you see it all the time, right? These assholes will never change their mind. He's like, I said it and that's it. The great leaders change their mind on a dime. When the data changes, you change. That's it. That's how you run great businesses. When you see things change, you need to change. Or your AOL or your BlackBerry. And, these stubborn CEOs are like, no, it'll be okay. It'll come back. Boom, you're dead. You need to change. You need to go where the puck's going. And you're not going to see that. You're not going to see a 75 basis point hike next time or the time after, even though we're going to need that, even though as we get into that, inflation's going to be higher. You're going to see the dollar continue to rise. The 10 years, 3.15 going higher. Remember, 3%, just hit 3% last week. Again, it's starting to surge again. So, the market conditions are not great. The uncertainty is still there. I wish I could tell you more, but if you're looking for safety, cash is king. REITs leverage to residential housing, maybe even a little bit of commercial, but in the right areas with population growth, you're seeing population growth, that's going to continue, especially with low inventory. That's a great investment to me, especially over the next 12 to 24 months. Energy and ag, I'd be buying on pullbacks. They're pulling back, which you're looking at these sectors, prices are going to continue to rise no matter what. I mean, we have a massive shortage of fertilizer. We're looking at energy, where if Russia decides to cut off natural gas, holy cow, natural gas prices, again, that goes into chemicals. That's why you're seeing with ag, where these fertilizer companies, that there's going to be less food. I mean, it's a significant problem. I covered it last week. Actually, the TikTok video that's actually has over 100,000 views on it because, it's a problem that people aren't seeing right now, I guess. You don't know what's going to go viral and what's not. But energy, ag on pullbacks, and you're going to see pullbacks in even the great sectors, you'll see pullbacks. Definitely see pullbacks. Be sure to follow your stops, too. It's ugly out there. There's massive deleveraging taking place. Even the best names are selling off. But when I look at this market, it reminds me closer to, I would say, January during the credit crisis, January 2009, when a lot of people say, well, the market's a buy here, it's a buy here. And you were right, but you had to endure a lot of pain because from January to March, the S&P sold off. I think it hit the final of 666. It sold off close to 30% just over those 3 months. But you were right because a couple months later, you recoup those gains and then boom, you're off to the races. You're never going to pick the absolute bottom and you're never going to sell at the absolute top. That never, ever, ever happens unless you're very, very lucky, maybe in a situation 1 or 2, whatever. But almost never happens. Even though all those charts and figures that you're going to see and all the promotions, if you buy here and you sell here and you buy, they have these little circles and all the bullshit, right? Just try to get you to buy their products. It's all bullshit, okay? It's not technical patterns. It's not whatever. It's just, it doesn't work that way. It's never that easy. So for you want to be able to buy assets that are cheap and that are growing. Right now, the S&P 500, is trading at 15 times forward earnings. That's the cheapest level it's been, I want to say, the 10-year average, I think, is about 14. The 5-year average is more like 18. So we're looking at an area where we're becoming very cheap and earnings are expected to grow over 10%. That's why it's cheap. If earnings expected to grow 2% or negative, that's not cheap. All right, a 9 PE is not cheap if you're expected to lose money and not growing over the next few years. That's not cheap, right? So it's cheap if you could be at 30 times forward earnings, and that's not expensive if you've grown those earnings by 60, 70% and expected to grow it over the next couple of years, right? So you have to take one with the other. But when you're looking at 15 times forward earnings, the S&P 500, with earnings expected to grow more than 10%, that's pretty cheap. And that means you're going to find a lot of names that are trading at single-digit PEs right now. And names that have got unfairly punished, along with a lot of the technology stocks and things like that have good growth profiles, that reported good earnings last 2 quarters, that are just getting nailed because everyone's deleveraging and you're seeing people on the wrong side. And that's what you're seeing even sell off in Bitcoin here. There's just a lot of leverage in these markets that needs to come out still. And people are selling and waiting, but we need a catalyst. We need certainty. And unfortunately, our Fed is just a bunch of idiots right now. And they don't know what they're doing. And I hate to say that because I know it's common to just beat up the Fed and that's what everybody does. But man, when you limit yourself in everything and just limit yourself where we would have been so much better off and we were much higher. You should have started raising rates so much earlier in January, and you didn't. In January 2021, you didn't, right? You waited over a year later to do it, which is fine. So why not do it quickly? It's going to hurt. It's going to be painful. We're all hurting. We get it. We're all fucking hurting. So just do it. Stop sugarcoating it and praying that inflation is going to moderate sooner than later, because if it doesn't, nobody has certainty in this market. And you're crushing this market right now, doing something that's unprecedented where you're aggressively raising rates, shrinking your balance sheet at a time where the market's getting destroyed and the average American is getting destroyed. And a lot of this was created by you. It could have been prevented if you started raising just a year ago from now, or 18 months ago, which you were supposed to do when all asset prices hit record highs. That's the past. Let's not look at the past. Let's look forward. Stop sugarcoating this. This is shitty conditions. You need to raise aggressively. This way you have the power. You'll be more in control of the markets, and you can stimulate the markets when inflation moderates, which it will. It will moderate. It will moderate. We're seeing it. We're seeing those cracks in the foundation. It's more than just cracks now across a lot of different industries. You're going to see it in unemployment. You're going to see it when we hit a recession. But let's just get up there. This way you have more power to control it, because we know what happens with the markets, guys. We know what happens. If you pull up a chart of the S&P 500, even of today, and pull it up since it became 500 companies, just pull up on CNBC, long-term chart. You're going to see a chart that starts low on the bottom and goes almost all the way up. Over time, stocks do great. Over time. You need to limit this shit, and you have the power to limit this shit. If you do the right thing, you're not doing the right thing. You have to be smart here. I know it's a situation a lot of these guys haven't been in. It's been the 80s, and people forgot. It's not pretty. But buying stocks at this level, you're going to endure some pain, but 18 months... that's when you're going to see the benefit, because you're going to be like, holy shit. It's just like when you look and you circle the March 2009 lows, when you the March 2020 lows, and you're like, holy shit, this stock was trading at $5 and it's now $180. I mean, that's where you make fortunes. People make fortunes, life-changing gains when they're buying shit dirt cheap, not when they're at all-time highs and they continue to go higher for a couple of years. It's the smart people that buy assets when they're dirt cheap during times like this, using the stupidity of the Fed and our government to buy asset prices dirt cheap that are really good. You're going to endure a little bit of pain. If you're going to invest a little bit here, a little bit there, don't take full positions right now. Again, there's a lot of uncertainty, but you're going to look back 18 months ago when inflation moderated, the Fed finally will have the rates where they're supposed to be, where the balance sheet will be shrunk and it'll be ugly and we might be down a little bit more, but it's going to be a time when you're going to look back, you're going to be, holy shit. Like, this is one of those times where if you're sitting on cash, which you should have cash on the sidelines, this is one of those times that makes a lot of sense to start picking away when everybody wants to sell and you feel like, hey, I got to get the hell out of the market. It's usually the time that you should be buying. We're close. We're almost there. We just need some kind of catalyst, some kind of uncertainty. It could be provided by the Fed. It hasn't been. Hopefully, we'll see more aggressive rate hikes going forward, and they won't just limit it to 50 basis point hikes, because you might get away with that. You need inflation to moderate. I just don't see inflation moderating over the next 3 months. I hope I'm wrong on that. Because if I'm wrong on that, that means everyone's going to be okay. That means everybody's going to make a lot of money. I hope I'm wrong on that. What I'm seeing with the data doesn't suggest that. So anyway, if you're a Curzio Research Advisory member today, Tuesday, you're going to get your issue today. It usually comes out on Wednesday, but I'm going to do a day early. Just want to provide, more timely updates. We did sell out of some of the positions. I won that things are really, really looking bad last month. We sold all those positions. Good thing we did. However, we still have position in the portfolio, and they're getting hit like a lot of the other stocks are getting hit. So I'm going to update all those and tell you what I see. Much, much more details in this podcast, which goes out to a free audience, which is on all platforms. It's for the paid subscribers, Curzio Research Advisors. So expect to see that issue later today. And any questions or comments, guys, I'm here for you. FrankCurzioResearch.com. That's Frank at CurzioResearch.com. And I'll see you guys tomorrow. Take care.